Stocks that I think have massive upside in 2026. These are some AI background infrastructure plays that focus on data centers and the overall background infrastructure needed for AI growth. For the video, I'm going to be focused on a mock portfolio that I've put together of all these stocks in Snowball Analytics, which is a tool I highly recommend you all check out. Um, Affiliate link is in the description. So the sectors that these are in, obviously, the majority is information technology, some communication services. One is an energy play, one is an industrials play. So it's not just what you see on the end, at the end result, the endpoint with NVIDIA and AMD and companies like that. It's also um, data centers, energy production, chip manufacturing, warehouse management, networking, so on and so forth. And companies like Meta, Google, Microsoft, Amazon, all the usual suspects, they are pretty much basically investing heavily in a lot of these. So we're gonna go one by one. And oh, welcome! Wow, up early also. So we're gonna go one by one into the portfolio here. So these are the holdings of the mock portfolio. Um, So I am bullish on, and it didn't fill out everything, but let's start out with, we'll go in order here. So Meta is one. So I've got 150 shares of Meta in this portfolio here. Meta is paying a dividend also. So dividend investors, I know you all like that one. So Meta, my rationale, one of the things, I think it's extremely undervalued right now. In fact, I noticed the PEG ratio is like 0.38 as of this week. Um, Also, because of the earnings miss, last earnings, they've been beat up so massively that I have them as a great buy right now. In fact, I'm trading METU, the leveraged ETF on Meta, so I have it as a great buy. The next one is Cameco Corp, CCJ. Now, I'm going to go in depth a little bit here. Let me see if the screen will flip with me. I guess, let's see. Okay, so here we go. Okay, so share this one. Here we go. So this is Cameco. So I'm in Snowball Analytics, which is, I'm going to concentrate the bulk of this one on Snowball Analytics. Okay, so I like how it does this. Why is the stock moving today? Shares of uranium and nuclear linked stocks are trading lower. So Cameco, one key point. So the Trump administration is reopening 3 Mile Island, which is powering like all the data centers for Microsoft and other areas. They own 49% of Westinghouse. Google, Amazon, and Meta are all signing nuclear powered deals. Some analysts have this with a 33% upside in the year 2026, which is phenomenal. Anything with upside over 30%, I would say, is tremendous. So this is obviously a big nuclear energy play. We have all the specs here: PE, EPS, beta, revenue growth. Look at that revenue growth, 100%. How about net income year over year? 1,000, 11, 18%. Free cash flow. How about this one? 224%. That's phenomenal. Now let's do the same for Meta, since we just are going in order here. I'm going to pop out over here and do this one. Let's look at some of the specs, some of the fundamentals on Meta. So Meta, and the whole market was down today, obviously, but PE ratio 28.5%, EPS 22.59, beta a little higher, little elevated compared to the overall market. Revenue 21.61, net income 36.18. Negative free cash flow, that's a concern, but they're going to turn that around. And of course, Meta pays a dividend. All right, back over here. So our next one, and it's kind of easy to, play spoiler here because you can kind of see everything here. The next one is going to be ARM Holdings. So ARM kind of does the licensing and royalties without actually making stuff themselves. So let me switch over to here. Okay, so we're going to go over ARM next, and then we'll go over Leg, and then Firstborn after. Just kidding on those two last parts. Okay. I like, again, how it gives, why is this moving down? Shares of broader chip stocks are trading lower amid ... and you gotta upgrade to see that. Next earnings date, February 4th, 3 days before a very important day. I'll let you all guess what that is. PE ratio is really high, earnings per share is really low, revenue growth is low. Look at the free cash flow, though. Free cash flow is phenomenal. Now, for all these stocks, I'm gonna give you what the analysts have as upside, or shall I say some analysts. Um, okay, so for the one that we're on, so ARM, so again, it's like double, it's like, they get paid twice because they own licensing and royalties on a lot of these chips. Amazon, Google, Microsoft, NVIDIA are all developing ARM chips. 44% is the upside for 2026 for ARM. And now let's go back to the portfolio here. Okay, so the next one is going to be Nebius. I don't have a whole lot on Nebius, just the fact that it's got 101% upside in 2026. We will go in here and look a little bit here. Why is it moving today? Shares of companies within the broader technology sector are trading lower. And I think this is stupid because obviously Oracle missed earnings, so it took the whole tech sector down. Look at the growth here, though. 769% revenue growth year over year, 205% net income growth year over year. Phenomenal. Okay, now back over here. The next one, AppLovin. I've been talking a lot about AppLovin lately. You're going to hear me in 2026. I would imagine we're going to be talking a lot about this one. Okay, so AppLovin. Let me give you some little tidbits here. So think of AppLovin as AI that prints money. The predictive app downloading is the core of its business model. Okay, so let's go over here. Currently trading at 670 is pretty expensive. But get this one. The free cash flow per quarter is over $1 billion per quarter. Analysts have it as with a 50% upside in 2026. Now, there are some downsides. The fact that there's lawsuits over their data collection practices that are pending. Revenue growth 77%, net income 164% year over year, free cash flow year over year 69.9%. Wow. Okay. Next one is going to be Applied Digital. And I just saw Charles Payne talking about this on Fox Business this week. And if you know Charles Payne and you know Fox Business and you follow the shows closely, if he talks about something, it's legit. Okay, so Applied Digital. Let's go over here. Okay, so a lot of these stocks have the same note on here. So January 20th is earnings date for this one. Earnings per share is negative. Beta is really high. That's one of the highest betas I've ever seen. How about that? That should be in the high beta S&P if it's on the S&P. Okay, so revenue growth year over year, 5.79%. Net income is discouraging. Free cash flow year over year is also discouraging. But Applied Digital is important because it's very important to the AI ecosystem. Deals with CoreWeave and other companies. Analysts have it with 117% upside. Okay, back over here. Are we having fun yet? So last but not least, we've covered 6 of them. We're going to cover a 7th. Arista Networks, 800 shares here for almost $100,000. So Arista Networks, analysts have it with a 46% upside in 2026, currently at just less than $125 a share. PE is pretty high, earnings per share, beta a little elevated, revenue growth 27%, 14% net income, 6% free cash flow. There we go. Okay, back to portfolios over here. So this, a balanced portfolio between all 7 of these, which I think this is going to have massive growth in 2026. This is 610,507. It's got a little bit of dividends. It pays a whole $487 annually. And unlike my dividend portfolio, I'm not sure why this isn't showing it shows my cost basis, but cost basis and current value are the same, even though I have different dates in here, dates of buy-in. So anyway, let me know if you all have any questions. Please smash that like button, comment and subscribe and join Discord. Let me know what you all think about these stocks. Let me know if you all agree or disagree with these picks. Otherwise, have a great rest of your morning, and we will see you all in the next one. Take care. Bye.